Since 1987, we've helped investors navigate the markets using technical research focused on relative strength, supply and demand, and momentum. From sector rotation to asset class rankings, we highlight what drives performance. Nasdaq Dorsey Wright, helping you stay one step ahead.
Hello, everybody, and welcome to this week's podcast for the week of August 5th, published on August 6th. My name is Miles Clark. I am joined here by a very special guest today, the birthday boy, Trevor Plesko. How you doing, my friend?
Doing well.
What are you, 21?
Not quite. Definitely a little bit off that, but
Well, that's
yeah,
good. Happy birthday.
Appreciate it, man. Appreciate it.
Honored to be sitting here across from you, obviously. A lot of stuff to talk about.
Hey, I do want to call out, I feel like it's a bigger week for you with this upcoming weekends.
Yes, I am getting married. So you only do that once, hopefully, right? No, obviously, I'm getting myself in trouble. Anyways, yes, it's a very big week for both of us. It's going to be hoping for no rain because it is on and off rain here in Richmond, of course, every night at thunderstorms.
Hopefully, they'll get it out of the system beforehand.
Yes. Anyways, lots of, we talk about good news on personal fronts, good news from the market front as well. Names we typically look at over the last week or so, a lot of upside action for your growth focused areas of the market. Nasdaq Composite up around 7%, emerging markets up around 6%, the S&P 500 up around 4%. Towards the downside, only a couple of areas, crude oil struggling a little bit on news of progression out of the Middle East and negotiations wise, TLT, so long duration bonds, and then the US dollar off around 1.5%. So lots of, green on the screens here. It seems like we've been just rallying into the close. Always a good feeling when you kind of close near or at the highs. And maybe we can start off just with the chart of the S&P 500.
Sure thing. Let's take it away. Definitely seen some pretty significant upside action here. Back at all-time highs after what was a little bit of a month or two of consolidation. But with recent movement, taking a look at SPX here, did break that triple top there at about 7,600 before pushing again to all-time highs around that 7,750 range. With some pretty nice support there, starting around 73.50 there, continuing until about 72.50. Kind of reminds me of some of the similar action that we saw. Not necessarily to the downside here necessarily as much as we saw at the end of March, but saw kind of an area of consolidation here from September onward until kind of a rally there at the end of April. So again, consolidation isn't necessarily at the end of the world because more often than not, you see things eventually push higher, especially positive side to see it push through some pretty significant resistance there.
Yeah, no, I certainly agree. Sometimes this stuff works, right? I say jokingly, but you get a nice triple top break, just as you mentioned here. I think it is worth mentioning, you consolidate a little bit, then you break out. What's going to be most constructive here is going to be or would likely be, a pullback towards that old resistance, right?
Absolutely.
The question now is, can we avoid getting back down there to like that 72.50 mark, right? Can we avoid getting rid of all the progress that we make? So pullbacks to the magnitude of the middle of the trading band, the 50-day moving average, kind of the old resistance level in between that 75.50 to 7,600 mark. Ultimately, can we camp out there, right? Can we set that up as a new base of attack before kind of ultimately pushing to the upper 7,000s, I think is probably the goal. And, really what's bringing us there, participation has expanded significantly over the course of the last month. I know that, last week, I think, and the week before, and maybe the week before that, we were always talking about participation and how in the beginning of the year, it was a bit of a concern, right? But if you take a look at some of our indicators, like BPSPX, for instance, this is actually pushing to new 2026 highs at this point, right? That's a good thing.
Oh, absolutely. I mean, I think there were some worries about you saw some, especially from those growth areas, take a little bit of a downturn. But despite that, there really wasn't a big drop in participation. You still saw kind of the average stock still pushing higher, despite some of that kind of cap weight or mega cap or growth weakness. And I think we've seen that kind of resolve itself here recently, where had participation kind of moving to new highs here, at least in 2026. About more than 2/3 of stocks now back to trading on a buy signal, at least among the S&P 500 constituents. Not necessarily into extreme territory just yet. I mean, overwhelmingly pretty positive signs from breadth here, with things kind of continuing higher.
Yeah, and over and over again, right? We see these indicators really play out as you would relatively
Hmm.
expect. I mean, let's go back to April of this year, right, where we got down to about 32%. That wasn't as an intense a washout as we saw in something like 2024, or excuse me, 2025. Or 2023, or even the majority of 2022. But these indicators, the practical use case for advisors is to wait for this to wash out. Wash out
Hmm.
being designated to at or below 30, which we didn't get to.
Hmm. But
But
still right on the cusp.
exactly, wait for these indicators to get low, and then pull the reversal, right? Or look for the reversal up, which signifies that markets, at least in the near to intermediate term, have washed out,
Hmm.
right? And, ultimately what markets have done since the end of the first quarter is expand,
Hmm.
right? Go up, for lack of a better word. And now here we are nearing some relative participation highs. That's certainly not a bad thing. Most of the market upside comes, in between current levels and a little bit higher. But again, now we're watching for things to get a little bit hot, right?
Hmm.
Maybe see some type of just consolidation again from here, right?
Yeah, but it's still definitely a little bit off from some of those more frothy levels that we may
Yes.
have been at previously, like 2025. I mean, still not necessarily a bad thing to be up by 74, but really once you're in the 80s, like you saw some previous environments in, that's where things can get a little bit more troublesome. But in general, pretty healthy all around in terms of the state of participation right now.
And even if we get up there, I do want to,
Mhm.
kind of double click on one item here, which is even if we get up into that 70 plus range,
Range. Hmm.
we have done some studies that suggest more often than not, reversals from that point aren't the end of the world. Now, of
Hmm.
course, there are some that it is bad, right? Like you look in, whatever it is where you got up and then it was an immediate straight shot down. Most of the time, reversals from elevated field position are really just strong markets taking a bit of a breather, which
Hmm.
is not bad. So keep that in mind. Even if we see breadth continue to run as we move through the back half of the year, a reversal wouldn't necessarily be the end of the market, right?
Absolutely. I mean, more often than not, you need a stronger underlying market to push things into kind of frothier or more overbought territory in the first place, which usually is a pretty good environment for longer term strength, even if things kind of pull back more in that near or intermediate term there.
Yeah, I do want to maybe switch gears or kind
Mhm.
of further the conversation with we've seen the average S&P 500 stock expand. Pull up, if you don't mind, the chart for the Nasdaq 100
Mhm.
NDX. Obviously, the Nasdaq 100 still up 17, nearly 18% so far this year, so still a very productive year.
Mhm.
However, when we talk about this recent rally, we see it return to a buy signal, but I'm curious your thoughts on this. Do you like this technical picture or do you not? Not to put you on the spot, but what are you looking at in this chart? Maybe a bull and bear case.
Yeah, I mean, I think just to give some context, I mean, when we're looking at a point and figure chart and identifying kind of support and resistance, I think the things you want to look for in terms of kind of the most bullish signs would be you're pretty far away from resistance, you have some nearby support. And then on the inverse of that, typically when you're pretty close to resistance, specifically when there's several levels, that might seem a little bit more important while being far away from support, can be a little bit more bearish. So in this case, I mean, we're pretty much coming right up on some of that previous resistance there around 29,800 as well as 30,200, followed by some resistance from all-time highs around 30,600. 200. And then from more of a support perspective, no initial traditional support until that 27,200 level. So, I mean, despite that return to a buy signal, I think there's definitely a good amount of resistance up ahead that it might have to clear before really all signs turn green. I mean, definitely positive to see this reversal, but I think given the resistance up ahead, could be a little bit of cooling off until it finally breaks through that level there. I think bull case is more of that longer term picture, where if you're looking at something on more of a relative basis, like you look at it versus the S&P 500 equal weight on like a relative strength chart or other constituents, you'll see that still showing some of that RS buy signal, I mean, even on a shorter term scale. So I think for the time being, weight of the evidence behind the longer term strength still there for something like the Nasdaq 100 index, but from more of a chart perspective, this range here from now until maybe about 31,000 could be a little bit more choppy as it kind of breaks through or figures out that supply demand relationship.
Yeah, it's a very good point. And, what I also want to emphasize is that it has really been a symptom of, how intense the decline was initially, right? The S&P 500, your equal weighted S&P 500, that exhale was pretty intense, right? Or excuse me, was relatively muted in comparison to the rather intense exhale for your growth focused areas. And so point is that now we have reversed back up, but we had a longer ways to go. And so that certainly doesn't mean that this technical picture is not constructive. I actually would, like to further your idea and just say, we might look at some resistance right now, but this is an area that if it breaks out, to those highs like the S&P 500 was able to do, well, we've been consolidating, right? We've exhaled, we tested the lows, and now we're rushing back up to the highs, right? And so watching for that breakout, setting an alert for that breakout, I think that's probably the important point. If we can do that, right?
Yeah,
well, like
absolutely.
you said, there's a lot of resistance that we've got to prove
But
ourselves
once
at.
it breaks through, or if it does, definitely a more positive sign. And then, especially with it being above those levels, oftentimes a little bit of polarization among those different levels where previous resistance can become new support. So a lot of this range from maybe about 30,600 to about 29,000. This could actually act as new support once it's able to clear this. So I think for now, just keep an eye on it. Definitely set alerts, see for further movement as we watch for further developments here.
Yes. Okay. Pull up Crude. Let's
Crude?
take a look at Crude. That was the other one that's moved significantly over the course of the last week. A handful of weeks ago, Ian and I were discussing this pretty significantly important, at least it seemed to be, significantly important upper 70s, kind of 80 mark on that default chart for Crude. I had mentioned it as a point where it was, at kind of an inflection point, right? Markets previously have come down to that point throughout the course of the Iran war, had come down to that point and then ultimately pushed back higher, right? And so Ian and I were discussing, well, markets seem to be pushing 80, right? Or putting 80 as hey, we think the war is over, or, we're going to see de-escalation or further escalation, right? Depending on which side of 80 that we're at. We had initially pushed up above that point, broke back into a positive trend before ultimately now crossing back down below 80, right? Again, on some possible continued peace deals talks. But again, energy continuing to put in lower highs off of those 2026 highs up above. And here we are back down below 80, right?
Yeah, I mean, definitely a lot of results of some peace talks here over the last week or so, driving some positive movement in domestic equity indices. But I am curious to see, I mean, you also saw some these kind of lows from the start of the year. We were talking about kind of polarization with the last chart. I think some of this previous resistance here could act as some potential support, I think, going forward too, where you saw kind of there in July, lows kind of coming here to the high to mid 60s. Also aligns with kind of where the chart was pre-Iran war. So I think from here, do have that bullish support line. They're starting at about $73 if it continues in O's there. But besides that, got about that $71 support followed by about that $68 support. So these kind of upper 60s could be kind of the new normal if we do try to finally see some resolution in that global conflict and see a little bit of continued pullback for the commodity here.
And show the folks at home how to change the scale to a 2-point scale.
Yeah, I mean, it's definitely more of a sensitive scale. Each of these boxes corresponds to $1 price movement. If you want more of that longer term view, one way to do that is by increasing the chart scale. So instead of each box corresponding to $1 of price movement, now it's going to correspond to $2 here. And this is going to provide a much more kind of grand or bigger picture view of it. And with that, you do get a little bit more consistency here where now on a streak of 5 consecutive sell signals, kind of continued to move lower since moving into that negative trend there in May. So a little bit more consistent picture here using that longer term scale. And from here would kind of look towards that $68 level again as initial support, also kind of aligning with some where crude had kind of previously traded prior to some of this escalation again.
Yeah, it's a good point with the caveat that be careful changing around the chart scales. It's the first thing we learn as interns. Both Trevor and I were interns. It's the first thing they teach us besides what the X's and the O's are. Be careful because you can get the chart to tell you whatever you want. So, we try to be unemotional in our process and everything like that. Be careful with changing the scales, obviously, because it changes the information that you see. But anyways, I like that 2-point chart because it kind of takes out some of the movement around an asset that's historically pretty volatile. Maybe the last chart, unless you've got some other stuff around earnings that you want to talk about, pull up the dollar DX/Y.
Give me just a moment here.
Because I think that this reversed back down in between this conversation and the last one that we had. Probably a lot of that's going to be rate focused and things along those lines. But anyways, we had seen the dollar, interestingly enough, move back up to test its trend line, its positive negative trend line up above that bearish resistance line, and then ultimately come up to test that, reverse back down over the course of the over the last week, and are now looks to be heading back down to some 2026 lows on this chart.
Yeah, I mean, and this is definitely pretty interesting. One kind of big study that we put out pretty regularly anytime there's kind of a change in the dollar's picture is that kind of rising and falling dollar study. I mean, rising dollar definitely has a lot of implications on the broader markets. Same with the falling dollar environment. So to kind of see a change in the regime of whether it's moving higher or lower, definitely something to take note of. I think for the time being, weight of the evidence continues to support the idea that dollar in more of a longer term downtrend, especially with it reversing back down here, not necessarily violating that bearish resistance line. From here, might see some initial support around that $98 level, followed by some of the previous multi-year lows around that $96 mark. But overall, I think is a little bit more precarious than it was maybe at the beginning of the year when it kind of initially moved to that sell signal there around $96. But I think longer term, still mostly or more negative than positive here. I mean, I don't know if you have a different take than
No, not at all. I mean, I think this is also an interesting point when you take a look at old support acting as new resistance. Right? If we couldn't meaningfully get above some big support levels from 2023 to 2024. I mean, just as you mentioned, Trevor, that 101.5 mark, that was hovering around some big levels of support, essentially around 101, back from 2023 and 2024. So the fact that we couldn't meaningfully stick above there, it's just, hey, how do you read these charts, right? If we're coming up to big levels of resistance, if we're coming up to levels of old support and we can't stick up there, that's a bit of a precarious sign for the overall picture. And as you mentioned, Trevor, that's obviously going to have butterfly effects on the likes of international equities, commodities that are priced in the US dollar. So a lot of interesting elements there to keep track of. Any big earnings? I mean, there was a whole bunch of stuff. Any big earnings or anything like that you think is worth mentioning?
Yeah, I mean, at this point, when you think of movement over the last week and a half, I mean, just about the majority of the S&P 500 reported. I think one pretty notable one among kind of the biggest companies would be Microsoft. Definitely saw a pretty major spike there on earnings, rising about 15% on the day. And I think has been a pretty interesting picture so far here in 2026. This one here to start off the year, really since the tail end of 2025, really took a hit with some of those other software names, moved to several consecutive sell signals there until April, kind of initially had a little bit of a rally up there in June or through June, pulled back a little bit, but really since July there or kind of middle part of June has consistently rallied now on 3 consecutive buy signals. And from here, not necessarily facing any traditional resistance until some of those levels from all-time highs until about $55 or 55.2 there. Granted, I think with some of the upward movement we've seen here recently, it has been a lot of movement very quickly.
Yeah.
Oftentimes when you see movement like that, can be an indication that things might cool off. And one way we quantify that here is through that kind of 10-week trading band we look at of kind of how far above or below is a security relative to its 10-week moving average. In this case, 10-week moving average more closer to that $400 level, whereas Microsoft trading closer to about $500 and notably close to the top of that 10-week trading band when you look at something like our overbought, oversold readings at about 95%. So pretty much at the top of that 10-week trading band where we would expect it to be. So anything above 70, 75, a little bit more abnormal and definitely of note here. Did you have any kind of other takes on Microsoft here?
No, not on Microsoft, but one that looked pretty similar to me in terms of big reactions after their earnings and massive moves higher. Palantir.
Palantir.
They were up, well, it's 30% on the day after their earnings call. Obviously, blowout earnings for them. But very, very similar picture where you're a 3 for 5er at this point, moving back into a positive trend up near the top of your trading band, although not as significant. The picture was interesting to me because if you just look at a pure performance perspective, Palantir, even after a 30% plus day, still off around 10% so far this year. Microsoft up around 15, 20%. Still roughly flat for the year.
And still down from its highs prior in 2025 too.
Correct. Yeah, these were high-flying names. I'm certainly not saying that either one of these, if you take a look at the technical attribute score, they're both acceptable at this point.
More of holds than anything, yeah.
Yeah, but, I think that just speaks to the magnitude of some of these high-flying names in 2024, 2025. They necessarily haven't been the ones carrying the baton forward. You can say the same thing with, like with NVIDIA and stuff like that, which is consolidated while other areas have picked up a little bit. Anyways, just interesting, to say the least. And, like you said, with the majority of the S&P 500 having now reported, keep an eye out for our technical earnings piece that we typically put out around the end of each quarter, or earnings wise. So that'll be coming out in the next few weeks as well. Okay. You got any other stuff you want to talk about?
No, I think it's certainly been an interesting week, and I think we covered a lot of the stuff, especially on the participation side. Pretty encouraging to see a lot of the upticks and just more stocks contributing to upside. Always a positive to see.
Yes, we'll end it on that. I hope everyone has a wonderful and safe week. Trevor, have a wonderful birthday, and we'll catch y'all again next time.
Yeah, and pray there's no rain for miles over here.
Let's knock on wood. Have a good one, y'all.
Take care.